it is time for my February 2024 Vanguard portfolio update. It's been a long time coming, and there's been some pretty big changes to the portfolio, which I will be going through in a few moments. Let's just get straight into it. The current portfolio value split between my pension and ISA has a value of £115,367.56. This is split between £13,200 in my pension and £102,000 in my ISA. So we'll talk about the pension at the end because it is the smallest part. This is just a personal pension where I've combined all my pensions from prior jobs and put them in a single place so I know where they are. So let's get into the ISA. And as I said, we have hit £102,149.32. So this is a massive, massive goal. I'm really happy that we've hit this. I'm very happy and quite lucky that I've been able to invest money over the last, since 2018, I believe. We'll have a look at the graphs in a bit, and being able to put money aside and being able to invest it, and that money has now grown to over £100,000, which is really excellent. I'm glad this is the first goal, which I wanted to hit all those years ago, and on to the next one, whatever that is. We'll quickly talk about the investments, but in the UK we have a £20,000 ISA allowance. This is the tax year of 23-24, which goes up until April, and as you can see, I still have 16,000 remaining. The reason for this is because money has been going in and out of the Vanguard, because I've had a lot of life stuff going on. I got married, that was expensive, so it's good to be able to have your money in a place that's not necessarily a pension, because you can access it relatively easily. It only takes a couple of days for Vanguard to sell the funds and get it in my bank account. I'm sure if I tried to escalate, I'm sure they would be able to get it done quicker. But yeah, it is very quick and easy, and it means I can access the money instead of it being stuck in a pension. So yes, this will reset, and I'll be able to start investing continue to invest up to £20,000 a year without any tax-free. So let's get into the holdings, and as you can see, we have something very interesting here. What is this? Accumulating fund called VUAG. Not everything is in VUSA. Well, yes, Vanguard very quietly added a new type of fund, which some of you guys in the comments were telling me about. I don't know if this was an American audience who were saying, let's invest in here, but I didn't know they were here. I looked. I knew we had the distributing funds. I didn't realize we had the accumulating ones, but basically I've moved all my money into the accumulating. So if I just quickly go to this article here, accumulation versus income, what option is right for you? You can have a look at this in the description. But long story short, basically in the income, the dividends are brought out as cash, where you can use that cash to either reinvest or whatever you do with cash, spend it on life. But what I would always do with the dividends is buy more shares. So with the accumulation fund, this will reinvest the money directly into the back into the fund without you having to manually purchase more shares. So you can see here, reinvest any dividends with the aim of growing your investments over time, distributes any dividends to you as income. So we now have two, accumulation and income. Both of these portfolios are exactly the same. Top 500, 506 companies in the US, weighted via market cap. So this isn't the most up to date, but you can see Apple, Microsoft, Amazon, Nvidia, Alphabet, with Google, of course, Meta, Tesla, Berkshire, JP Morgan, etc. These portfolios are exactly the same, or these funds are exactly the same. It's just what they do with the cash dividends. Now these should be the same, but if I do look at the prices, you would expect the accumulation to be more. Income, £75.24, whereas the accumulation, this is a bit slow, is a bit cheaper. I don't know what the full reason for that is, so if you want to let me know in the comments. I would be happy to see. I don't know if it's because when the dividends are paid, is that affecting the price? Now, if I was to compare VUSA here, actually before we look at that, let's just have a look at the S&P 500. It is at pretty much its all-time highs. Yep, it is $503 a share. We'll look at that graph since, oh, that is crazy. Let's have a look since the bottom of the pandemic. I think it is, what, almost doubled since then? Up 120%, wow. So let's close that down and let's have a look at the VUAG funds. So if we go over them last 5 years, you can see it has tracked it back to here, up 105% at that time. Now, obviously, S&P is in dollars. This is in pounds. There is some FX, sort of, I wouldn't say hedging, but there is some differences there. And if we compare it versus VUSA at the same time, we have, oh, this isn't very easy to see. The VUSA, well, the VUAG is the blue, VUSA is the orange, and you can see that it is beating it despite the price being higher. But if we look over the last year, the VUAG has beat it because these investments or the dividends are being paid back in. So once again, please leave a comment if you do know why the prices are different. I would have assumed that the price would be higher on the VUAG, but as you can see, the returns, which is the key thing, is a little bit higher, which it will be over time because of the dividends it pays. So if we look at the max, the max won't be a fair amount because it hasn't been for 5 years. But if we look at the past years, 88.9% compared to 85, which is what you want to see. The lines look like they've crossed a couple of times, but once again, someone smarter than me can explain that. But let's get back in the portfolio. So the problem is with Vanguard is they don't show the correct numbers. £94,000 up to 101. That is not true. I have not invested £94,000 in this. This is the amount of money that I've put into my fund. So this is the actual value here. I started with £4,000. I don't know if that's true. Let's go back to inception. That's why I've started with zero. Well, I don't know why it doesn't return that. So I deposited roughly £70,000, and I've had an increase of 32, which, if my math is correct, is about a 45% increase since 2018, which is pretty darn good. Any money I've invested then has basically doubled, and then obviously I've been dollar cost averaging or pound cost averaging the entire time. So yeah, this is the graph over time. You can see that it has a rate of return of 96%. Initial rate of return, I don't know how Vanguard calculates this. I don't really care about it. But if we have a look here, I've withdrawn. Oh, actually, I paid in £8,000 and withdraw £10,000. Total is 70. This doesn't really make any sense. Investment sold 23. This is me moving money around. Gross interest, that is the money in the cash. Dividends, which will no longer go up, which is quite sad. I liked watching that go up. And then the charges, £300, or almost £400 for £32,000 worth of increase. Obviously, S&P is going up. We're in a bull market. We have been, even with the COVID crash, that has completely crashed, disappeared. It's a blip in the past. So obviously, as the American market goes up, things will keep on going up. Will that go up forever? Probably not. But hey, that's the risk you're going to run. So let's have a look at my transactions. This was the big switch here. 3rd of January was a little bit scary. Moved all my money out and then bought the VUAG. But unfortunately, actually, on my payments, I did have the S&P 500 VUSA still in there, which is why I have £1,000 in there. So what you can do with Vanguard is very, very easy. You just go on switch, and this will, we want to switch all of these units. We'll sell everything, and we are looking for the equity fund, which is VUAG. I'm still not used to VUAG. I like saying VUSA, but, you know, I'm with the old and with the new, or whatever that expression is. So then we're, selling this, we're buying this. Yep, I've read the documents, totally read them. And then Vanguard will handle everything. In a couple of days, you'll see that it's sold and everything will be in there. So if I have a look at my... so yeah, that's just a quick summary on the ISA. Pretty happy. Well, not pretty happy. I'm ecstatic that I've been able to invest all that time. That's actually, let me have a look at the transaction chart over time. If we go on the, not the insight, performance. And you can't really see it, but you can see how basically the steady increase. Let me go back to the inception over the year. Inception. Their website is good, but it's just a bit slow, unfortunately. But yeah, you can see the steady increase, and a lot of volatility as life was making me do stuff. But because of the market and how that's been affected, the swings are a bit more extreme. I mean, look at that from October till there. I mean, if you saw how much, let's go to my investments again. Is it holdings? Nope, not holdings. Where is it? Performance. Transactions. I want to see transactions. Yeah, so January, £1,000. February, £1,000. December. See, I was still pretty consistently buying £1,000 every month. But if you look at the fluctuation in those couple of months, it went from you know, me investing £3,000 in that time, and it's gone up about £20,000, which is crazy. It just shows how strong the market has been over the last few months. I mean, if we don't even have to speculate, we can just look and see what we've seen for the last even 6 months. It's up 13%, and since November, which is, yeah, it's up a similar amount as well, 16% in that time. And obviously I've been investing from back in before this chart, back when it was over under £30 a unit. And quickly going on to the pension. Let me just have a look at this. This is my personal pension. It's just money I've moved in, and we have small increases of £800, which I can't complain about. It's compared to my pension funds with companies that I have. Some of them have been even been down. So, you know, I'm not going to take this money out for a while. I might as well ride the S&P 500 for as long as I can, until I'm much older and looking to retire. But right now, I think just trust in the American markets. I mean, obviously, past performance is not a indicator of future performance, but you know, I think it is the simplest choice right now is you just keep on investing. Right, guys, thanks for watching. Hopefully this video was enjoyable. I know you guys are looking forward to this. I will try and keep on doing this more regularly, but obviously I have been pretty lazy over the last few months and trying to get back into the swing of things. So yeah, please give a like on the video, subscribe if you're not already, and I will catch you guys next time.